Hello, everybody. Sorry, I was running a little bit late. Had to get a smoothie. Let me just get set up here. All right. I have a cold that I'm getting over, so I might be hacking occasionally. and I apologize for that. So 2 new ideas today. I like both of them a lot. I like one of them a little more than the other, but I am going to tell you both of them. So what should I start with? The idea I like more? I like both of them a lot, but let's start with the easier one. So the easier one to explain is ticker CNR. Name of the company is Cornerstone Building Brands, and I have no idea what they do. I literally can't tell you what they do, so doesn't matter to this story. But it was written up on Vic about a year ago, and as you can see from the stock price and the chart over the last year, business is booming. The stock has done really well over the last, I guess, 2 years. I think the general theme on Vic is that 2022 is going to be a banner year for them. It's a housing related stock. So what's going on here? So if you pull up the 1-month chart, you will see that it started moving from 14 to 19 in the middle of February. And the 2 dates that are important on the chart are February 10th, when it went from 17 to 19, and then on February 14th. So there is a majority owner here of this company. It's a private equity firm that owns 49%. And there was a Bloomberg article on February 10th that they were considering acquiring the whole company. That's what took it to 19. And then on February 14th, they press released that they have made a best and final offer to the company at $24.65 to acquire all the shares they don't own. The company said that they would let the special committee evaluate it, and they will tell shareholders, what the conclusion is in the future. On February 22nd, I believe, let me just make sure that's the date. That's right. Hold on. On February 22nd, sorry, you guys get what you pay for, which is nothing. So this is my professionalism at work here. Sorry, on February 18th, so 4 days later, they announced they were rescheduling the conference call that was supposed to be on Monday, February 21st, and they were rescheduling until Tuesday, March 1st, when they plan on following their 10K, and they canceled their conference call. So it doesn't even say when on Tuesday they're going to release the earnings. So this one's really timely. I didn't even realize how timely it is. There's a decent chance that this is all over on Monday or Tuesday. What are the odds of different things happening here? And let's just walk. There's a lot to walk through here, okay? So the majority owner, I guess they own 49%, so the controlling shareholder and the company had been negotiating up until the point that they put out that 13D and press released that that was their best and final offer. So over the course of weeks or months, they had been negotiating with the special committee. We know this because if you look at, I actually was just, someone just alluded this to me. If you look at the letter that they filed in the 13D, it said they had to get a waiver from the company to even approach the company, which is odd because they have a standstill agreement with the company. For them to put out a press release and the company to formally acknowledge the 24.65 bid, one has to think that the special committee has agreed to this price in principle. And the reason why you float it publicly and not just announce a binding deal is that it's subject to a vote of the minority in the future. And a lot of the people that own this stock think it's worth well more than 24.65. So you do it this way to feel out shareholder support before you sign a definitive deal. You can also see what the stock's going to trade at after you announce your preliminary offer. If the stock traded over 24.65, they would know that they would not get the vote. The stock's done the opposite. The stock's traded weak with a huge spread to 24.65. So it's very likely that shareholders are telling the company to take this offer. And the special committee can see this plainly by where the stock's trading. What are your risks here? Okay. Your first risk is that the stock market has been crap the last 2 weeks, though today and yesterday has been much better. And they decide they no longer want to buy it as a result of the volatility in the stock market. It's a real risk. I don't think it's something we should have to worry about too much. And I think we might have already gotten a press release from the company saying that there's no deal. But it's definitely a risk. Okay. Your second risk is that they think it's worth more than 24.65, not the special committee. I don't think that's a risk at all. Because again, I don't know what the point is of them publicly announcing the 24.65 if they hadn't already agreed in principle with the special committee. But that large holders have said they're going to vote against it unless you give a bump. Your third risk is that they lower the price because of the market volatility the last 2 weeks. Again, I think that's a small risk. But even if they do that to say, let's say 23.50, we'll still make out fine from 21.80, right? What's your break price here? It was trading as low as 15 basically before this all happened. But we know that the majority owner wants to buy it for 24.65 now. And we also know that business is booming and they should have a great year this year. So in my opinion, your break price is somewhere in the upper teens, 17, 18, 19 dollars a share. Let's use 18. So at $18 a share, it's 385 down and 280 up. So it's pricing in something like a 65% chance of this happening. I think it's probably closer to 90%. I like it. I like it a lot. And I also have on June 2025 spreads that I put on for 250 to 260 today. And I think those are also a great way to play it. The deal should close by then. So you wouldn't even have a spread. You get the whole 24.65, and that protects you from the downside break. I have an equal amount position size on the spreads and on the common. I think that's pretty much sums it up, honestly. I don't think that one's very complicated. I would think we almost certainly hear on Monday or Tuesday. And if there's no deal, we'll hear then too, and it'll break. Hopefully earnings and guidance are really good, because that's again what the Vic guy thinks, that they're trying to steal the company. Yeah, I like it. The other idea is more complex. I have a much bigger position in it. And it's one of the better risk arbs I've seen in a long time. So it's SHLX. It's Shell Midstream. And the way this situation works is that in the last, I guess a long time ago, all the major oil companies created their own MLPs where they dropped down assets into the MLP pipelines. And all this was financial engineering, of course. And all of these MLPs were broken vehicles. So they all had them. Come on. Phillips had one that was ticker PSXP. Phillips 66 Partners, PSXP. BP had one, which was ticker BPMP. I'm going to talk about all of these. Okay. BP Midstream Partners. And finally, Noble Midstream was the third one. And that was acquired by Chevron. And this one's owned by Shell. So MLPs have terrible protections for minority holders. And the way it works with all of these, all the three I mentioned and Shell, I'm going to go through each of those three in detail, okay, is that the majority owner can acquire it at any price as long as the special committee of the board, Maisie, as long as the special committee of the board agrees. There's no vote. There's no shareholder vote. And they can get sued, and it could take years to resolve, but the protections are just really crap for minority holders in these things. All of these companies have been rolling back up the MLP into the mothership because they're broken vehicles. So I named you three major oil companies. All in the last 12 months, they've taken in the MLP. So what I did was I went back and looked at what the stocks were trading at the day before they made their initial offer for the MLP, how long it took for them to make a final offer, and what the return was from the day that the initial offer came to the day the final offer came. We have three examples: PSXP, BPMP, and NBLX. Okay, the one that's the hardest to use as a comp is PSXP. So I'm not going to spend a lot of time on that. But they made their initial offer on February 24th of last year. PSXP was trading at $24.48. And it took all the way to October 27th. And they acquired them, or they announced the finalized contract to acquire them, definitive agreement to acquire them. And it was trading at 37.66. I'm just using closing prices of the MLP, not what it was worth based on when the deal finally closes. It's the most simple way to do it, so that I could just kind of do apples to apples what I think is going to happen with SHLX. So that was a huge premium, 24 to 37. Forget about that one. I'm throwing that one away. Okay. The other two are much more relevant, I think, to the situation. So NBLX was $12.47 the day before they announced that they were interested in acquiring them. They bid $12.47, the same price as the closing price. Okay. It took 1 month before they announced a definitive deal with the board. Okay. It closed that day at 15:09, which is a 20% return. Now, if you use, hold on, I changed something. Just give me 1 second. Hold on 1 second. Some of my numbers changed. Just want to make sure this is right. Yeah, 20% return. That was an all stock deal. If you use the price of Shell the day before they announced the deal, it was only an 11.3% change. Okay, so the range is 11.3% to 20% is the bump from the previous offer and the closing price the day before. And it took 1 month. For BPMP, on August 4th, the stock was $12.99. The next day, they offered $13.01, effectively last price. And then on December 20th, so it took 4 months, the stock closed at $14.63 the day they announced the deal, stock deal, which is a 12.6% increase from the previous price. Now, mind you, the deal was worth more than $14.63 because it was a stock deal and there was a merger arb spread. Okay. And between and then the next day it closed like a 15 something. For both NBLX and BPNP, I am not including dividends, which would have increased those prices. I actually can't remember what the dividend was on either, but it doesn't matter to my point. Okay. SHLX was $12.89 a few weeks ago when Shell said they wanted to acquire it. Shell wants to pay cash for it, not stock. Okay. It's trading today. I have to see what it's trading at now while I'm talking to you guys at $13.66. Okay. If they were going to acquire it for a 12% premium, just like NBLX and BPMP, that's $14.43. You should get a 30-cent dividend in 2 months, at least one. If the deal takes longer to negotiate, you might get two. $14.43 plus your 30-cent dividend is $14.73. That's $1.08 gross spread, which is 8% gross return. If it takes 4 months, I think it should take much less than that. That's a 24% internal rate of return on SHLX. I should note, SHLX is an MLP, so you'll get a K1. So it makes your taxes a little more difficult. But you should be aware of that. Why do I like this so much? So SHLX cut their dividend last summer. And when they did that, they blew up the stock. They have historically, Shell has been a very good sponsor to SHLX. They basically did all sorts of financial maneuvers through the financial crisis to keep the company afloat, or at least in good financial shape, I mean. The reason why I like it the most is that Shell is a $200 billion company, and the minority stake of SHLX is a fraction of a peanut to this company. And in all three previous precedents in the last 12 months, once they made an initial offer, they consummated the deal. I can't come up with any outcome that would make Shell and the special committee not come to terms and agree on a price. I would say there's a 95% chance of a deal happening here. The only question you then have to ask yourself is, what price will the deal be at? So we know it's not going to be at $12.89. That was the closing price of the day before. Okay. To me, your worst case outcome, which I put at virtually 0% odds, is that the special committee doesn't do their job correctly and they agree to a price around where it's trading today. So you wake up and they announce they're buying it at $13.66. And we still get the 30-cent dividend in 2 months. And Shell probably gets sued. It is much more likely that we get at least the 12% bump from the $12.89 and as much as a 20% bump, maybe even a 25% bump, based on the fact that it's an all-cash deal. So the special committee can't argue that you can participate in the upside of the acquirer, that the acquirer's stock's undervalued. It's not a volatile business. It's a pipeline business. And so the price of oil and gas in the near term will not affect its valuation. You could pull up a long-term chart of it. You can see that it's been impaired. It went down huge during COVID, and it's been struggling to get back. I think the special committee can make a decent argument why they need to accept $15 a share, because that's basically the highs it's been at since COVID. It hit 16 in June of 2020, and it hit 16 in the summer of 21 before they cut their dividend. So you can make an argument they might even have to take 16 a share. But the reason why I like it so much is not because of the upside. It's because of your protection. The only way this deal breaks, and I mean the only way, is if the special committee and the large holders believe strongly enough that Shell's is trying to steal the company at whatever Shell's best and final offer is. And if they're trying to steal the company, then your break price here certainly isn't going to be significantly below where it was trading the day before Shell offered to buy it, which is $12.89. So let's just try to be extreme and see where it could go. I suppose it can go to $12, which there, it's a 10% dividend yield, and the dividend's covered by 20 to 30% after they cut the dividend. The company reported earnings yesterday, said they wouldn't guide, said they wouldn't do any shareholder meetings going forward. On the conference call, said they would not discuss the bid by Shell. And to me, all of this has a playbook, which we've seen 3 times in the past, which means that they're going to agree to a price. I'll mind you that the difference between $1 on the 26% Shell doesn't own is such a small amount of money. I mean, it's nuts. So the number of shares outstanding here are, I don't even know, like 500 million, I think. Let's see. Not even 500 million. The number of shares outstanding are 400 million. Okay? Shell is $209 billion. $1 on 100 million shares is $100 million. It's a $200 billion company. The boardroom of Shell does not give 2 shits whether they pay $14, $15, or $16 for this thing. It'll just come down to how strong the special committee wants to push it. And it's in everybody's interest for this to get done. So, I mean, I love it. I don't know, in this kind of market where really anything can happen, whether it's China or Fed rate hikes or whatever, to be able to have a risk arb opportunity in a setup where the buyer is price insensitive, where the buyer is completely agnostic to really any short-term market volatility. It's almost unheard of for a company of Shell's size to be trying to even mess around with trying to buy in a minority that's this small. I mean, the whole market cap of this thing is only $5 billion. So I think it should be trading at like $14.25 today, maybe even a little north of that. My guess is that it's all done in the next 30 to 60 days. I can't see why, especially because there's been 3 of these now, what would take the special committee and Shell so long to wrap this up. And with CNR, that should really be wrapped up quickly. That's a much simpler situation. I would think we hear on Monday or Tuesday. Your risk with CNR is the market's been really volatile the last 2 weeks, and maybe large holders have pushed back. And as a result, they're going to announce that they couldn't come to an agreement. And there's definitely a real risk of that with CNR. That one has downside. It's SHLX, which I think has much less downside. All right, that's it. That's all I got, guys. CNR, how long will it take to close best case? Pravid, I don't know the answer to that. They have to do a shareholder vote, but that's it. So I would think they should be able to get, they should get a close 3 months after they sign the deal. I don't know if June options will cover it, but the spread should be very low as you enter June OpEx. So if it's 24.65 deal, the stock should be, 24.50 or 24.40 June expiration. So your 260 turns into 440. That's kind of how I'm looking at it. Plus, remember, you might get a bump. If you get a bump, those spreads are worth more. Of course, they're capped out at $5. That's how I look at it. I'm shivering from drinking a smoothie. Any other questions? I think I think that if CNR knew within 48 hours of their initial proposal that was going to fail with shareholders, they would have reported earnings when they were going to report them. I don't think they would have pushed it out to March 1st. Again, my sole risk to me there is the market being volatile. But today and yesterday, the market has rebounded substantially. So, things are fluid. And I don't think a private equity firm is that focused on the near term like that, the short term. That's all I got, guys. No questions? All right. I'm going to sign off. I don't think I missed anything. The last thing I'll say is with SHLX, a guy in Vic brought up Boardwalk Pipeline, which the majority tried to take out the minority, and they just got told by a court that they owe hundreds of millions of dollars as a result of defrauding them. This situation is very different than that. So I don't think that Shell is going to be that concerned about that precedent. But I do think Shell will want to do this in an honest, transparent way, because a boardroom like Shell does not care about the $100 million. So I expect a fair and generous bid when we finally get our final price. Peace. Bye, everybody.